Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So we have been analyzing the markets in depth on this channel for a little bit of time now, ever since going all the way back to January. And it is because of the reaction, right? You know, traditional stocks, even crypto, things are looking pretty rough. And as we do really kind of think about that, the markets are getting red hot for fearful headlines, fearful articles, and just fear in general is at all-time highs. Now, we've also been seeing a significant shift in the markets that's telling us that we should prepare. In fact, I think that we should prepare for April. This month could be one of the biggest months for crypto and for stocks because of the possible sign of a major reversal brewing behind the scenes. Now, again, we have a few signals that are already telling us that a reversal is coming, and I'm going to talk about that in this video. But let's actually first start off with this clip here, this post here from the Coinbase letter, and then I will play a clip to support my argument here in a second from Raoul. So we have here market activity is at record highs. Trading volume on all U.S. exchanges hit a record 26.4 billion shares on Friday per zero hedge. Now, mind you, this trading volume is not just buying. This is buying and selling pressure. This is telling us that, a lot of people are either one, selling their positions, two, also buying. We know that there was a lot of inflows into stocks as well from retail on Friday. Now we have this officially surpasses the January 27th, 2021 high of 23.7 billion shares at the height of the meme stock mania. This is also more than double the average volume of 2024. The S&P 500 and the NASDAQ 100 dropped 9.1% and 9.8% this week, posting their worst performance since March of 2020. We are witnessing history. Now, like I said, technically speaking, if we really think about what's happening, the fact that we did hit the highest volume session all time, and when we go back to like 2021 and what happened next, it's kind of comparable, right? Now, on top of that, my main argument for the reversal here is all of the bearish signals that are getting pushed to us by mainstream media. For an example, we have over here breaking. Jim Cramer has said that Monday will be Black Monday of 1987, where the market collapsed 23% in a single day. I think the difference between now and 1987 is that the circuit breakers could slow things down. We'll write about this in my CNBC Investing Club Sunday think piece. Now, here we actually have a video clip as well. So we have new Jim Cramer warns of 1987 Black Monday style stock market crash on Monday, says he is about to be super mad. Black Monday was a global stock market crash where the Dow Jones tanked almost 23% in a single day. If the president doesn't try to reach out and reward these countries and companies that play by the rules, then the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. I will contain my anger, and if Europe moves against our fabulous tech companies next week, then I will be furious. So check it out.
The president doesn't try to reach out and reward these countries and companies that play by the rules, then the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. We will not have to wait out too long, will we? We'll know by Monday. Fortunately, we had an excellent set of employment numbers today. At least it makes it less likely a crash will necessarily lead to a recession. But if President Trump stays intransigent and does nothing to ameliorate the damage that I saw these last 2 days, I'm not going to be constructive here. I will contain my anger, but only because I lived through 87, and in the end, I came out okay. I was in cash for the crash. I know what this feels like. Oh, and if Europe moves against our fabulous tech companies next week, then I will be furious. That I promise you, because it should not happen.
So there you guys have it. So, Jim Cramer is peak bearish at this point. And we already know that he is a very big inverse signal. Whatever Jim Cramer is telling us to, prepare for or what's coming, typically the opposite does happen. Now, on top of that, I have been keeping a close eye on the dollar. The dollar being very weak is very bullish for risk on assets because, again, a weak dollar means people are fleeing the dollar. They're looking to park their money into, additional things for investments. So they typically look at stocks, they look at crypto, they look at anywhere they can make a buck. And with the dollar being as weak as it has been, and I do think that this will continue to sell off even throughout this week. I do think that risk on assets are brewing for a very big move to the upside, and that does also include crypto. Now, on top of, Jim Cramer being a big signal here and the dollar also selling off being a very big signal for, bullish price action to start to return to risk on assets, I also want to play this video clip from Raoul's YouTube channel, because this also continues to really reinforce our idea here, which is I still believe that 2025 is going to be extremely bullish for crypto. I think that's going to be very bullish for stocks as well. And I think that what we are now dealing with in front of us is a lot of noise, and it's basically a storm that's been created by the tariffs and the trade war that will soon pass. And what happens after is, well, the sun is shining, clear skies ahead, and I don't think that we have much to be worried about. But check this out.
So, Jamie, how I'm thinking about what's going on now is I know the talk is tariffs. I know it's all about what's happening today, what happened yesterday, what did Trump announce? But I go back to the framework that I've been using, which is liquidity. And the liquidity has led this whole price action by 3 months so perfectly. It's been sort of insane. And, I'm just, Peter, I'm just going to share a chart. This is from Global Macro Investor, just to kick us off on how I'm looking at this. Now, this doesn't have today's price action, but again, price action in Bitcoin is actually not that bad today. Not like the Nasdaq's getting nuked, and I'll talk about the Nasdaq in a sec as well. So, global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. But basically, should be the bottoming zone. What is happening here is there's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. Now, you can see from the black line, which is forward-looking, 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil, is actually financial conditions are easing really, really fast. The Nasdaq is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Forward, we've got global M2, and the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here some of the charts of the growth shock itself. I'm just trying to flick through. So yes, that's the financial conditions index. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. The last time you came on, Jamie, was pretty much at the tail end of a panic back in September last year. At the end of that god-awful range, nobody believed we'd ever get out of it. You came on and said, I think we're all going to be fine. I was of the same, and it all figured out. So lay it on me. Where are you in this?
Yeah, well, I mean, we both have our own hypothesis about what drives markets, and then we build frameworks around it. And obviously, your framework has informed a lot of what I do and how I think as well. But I created my specific macro framework based on the inputs that I saw and backtesting. And you build these, personally, I build these frameworks because I'm trying to eliminate a lot of the subjective bias that creeps in when you're investing to try and reduce errors. And my models are also saying that financial conditions as of starting in February and then accelerating into March, mid-March, all started to pick up and gave me the signal that Bitcoin should do very well over the next, over the foreseeable future, 3 months, 6 months, 12 months.
Yeah.
I couldn't predict what the Trump administration was going to do with tariffs, especially that formula that they've applied. I think that has caught everyone by surprise, even those that expected Trump to perhaps surprise on the upside. And so even with that, you now get so much more pressure on the Federal Reserve to act. And with that, we know typically asset prices respond quickly. And so it does seem like this is a growth shock that will be met with a requisite amount of stimulus. And that typically is very, very bullish for risk assets. And what's interesting is that Bitcoin, is 3 times the vol of the S&P, maybe about 2 times NASDAQ or 2.5 times NASDAQ. The price action over the last week and a half, maybe even longer, has been surprising given the moves that we've seen in other risk assets. So, of course, if things crater, if something else happens, if there is a geopolitical blow-up, or if there is other things which we can't foresee, then all bets are off. But that just accelerates, again, the response that will be required from central banks. It's like I describe it as investing in Bitcoin specifically, not just crypto, but like Bitcoin is like playing chicken with central banks. Yes. Because you know what they know, and they will need to do something sooner or later. And so it's whether you can stomach the volatility that comes with this asset on the way to the overall trajectory, which is liquidity up.
So yeah, I mean, listen, when we really think about what's going on here, all right, we know that liquidity is going to improve. We know that these markets are going to bounce back in a huge way. We just have to kind of weather the storm. Now, in my opinion, over the next few weeks, we are going to see these markets heat up in a big way. I think that now, this month is probably going to be our last major month to prepare accordingly for what happens next. We already know that the big whales have been buying. XRP has been getting bought up like crazy. This is, 4 different transactions of a very similar amount of over $143 million being transferred around. But we also know that whales have been buying up, Ethereum. They've been stepping in to buy up, Ethereum. Also, if you want to go and track some of this stuff, you can see, this from some of these big accounts. It's kind of wild, but we are starting to see a lot more inflows into the ETFs, into the markets. Even on Friday, even though, the stock market sold off, we know that crypto did add billions of dollars to its market cap. I mean, in my opinion, all the signals are there, right? Liquidity is going to improve. The M2 money supply is starting to, increase, which is also very beneficial. I mean, even in this video from Raoul, we could see the global M2 here, right? It's a lagging factor. It does lag behind. It's a 10-week lead here. But if you look at Bitcoin, right, we have the M2 money supply going absolutely crazy into 2025, hitting that same level that it did hit mid 2024, roughly like the first half or so. And we already know what Bitcoin did from that point on, right? It started to pump massively. I feel like right now a lot of people are just focused on one thing, which is what they're being told from mainstream media, from the big banks, from all of these headline articles, which is to be bearish. But if you look beyond that and you actually look into the signals here, the dollar is selling off. The M2 money supply is starting to improve. We're starting to see the market liquidity improve rapidly, and it has been improving for the last few months. And on top of that, we now have the biggest inverse indicators out there flipping bearish on the market. I feel like this is now a perfect environment for those that actually want to be a leader here, right? And get away from the sheep that are going to continue to follow what they're being told by mainstream media and by the big players that have ruined them year over year in terms of investing. I think now is the best time to really kind of separate yourselves from the pack and, be a leader. And I think right now, if we really think about what's happening around these markets, listen to what Raoul was talking about, seeing how the markets are improving in terms of, liquidity, not to even mention that the tariff discussions are starting to kind of flip a little bit. There's still a lot of concern around them. Don't get me wrong. I still think that we should pay attention to them. I just feel as if April is going to be the month where we start to see a shift and we start to see a reversal beginning. Now, the biggest moves, in my opinion, will probably happen closer to the beginning of summer, but I do think that we should prepare accordingly for this month because this could happen at any point. There's a lot of lagging factors in place here, I'm still looking, at I'm looking at the broad view of 2025 as being a very bullish year for crypto and stocks in general. We just have to kind of get through this tariff storm that we're currently in, and I think that we will very soon, and we will start to see the markets really kind of acting accordingly to what we are being shown in terms of major signals that are already there. So with that being said, I hope that you guys enjoyed this video. If you guys definitely like, subscribe, notifications on. If you guys want more free content, you guys more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, Nick, thanks for watching. Peace out.